Intraday traders, and welcome to the premium video newsletter for June 21st, 2013. Not much in the way of economy today, so I will focus on different technical factors. The S&P intraday chart looks like the market is trying to find direction. The two-day sell-off left investors and traders on the sidelines today for the most part. As I predicted yesterday, the market opened higher and began selling off during the session once again. I don't believe you will see much volatility for the next day or two as the market consolidates and finds direction once again. For the next few days, I think we're going to have a lot of random trading, markets going back and forth, nothing really too major or exciting. The end of the day S&P chart suggests that the stock market is going to go to the 1540 level. On a fundamental level, the market is not strong enough to continue moving higher right now, especially in light of Bernanke's announcement where he gently told the world he's pulling the rug from underneath the economy. I believe the market will consolidate but will continue edging lower in the next few weeks. I would be very cautious to hold long positions in the US stock market at this time as a result of the latest events. Moreover, the long trend line appears to be broken as well, and the long to short ratio is not extreme as it should be when a bounce is coming up. Looking at the 10-year note, the market looks oversold at this time. We had a quick trade and did well considering we were in the market less than 72 hours. I do believe the market is going to have a pullback as early as beginning of next week. The bond market, especially the futures market, tends to overreact to fundamentals, so expect a small fall in yield and a rise in 10-year bond futures in the next few trading days. If you recall, a few days ago, I demonstrated a bearish triangle pattern developing in the gold market. The market did break out to the downside as expected, and I believe there is substantially more to go to the downside. I do believe there will be volatility during the next few weeks, but overall the trend is strongly down. If you trade stocks instead of futures, I presented a few companies that track this contract about 97%. If you need a few stocks to look at, just send me a quick email and I'll provide you with the weakest ones in the group. Many traders asked me to provide a review of the energy market. The reason why I haven't touched this market in a long time is because the energy market is in a very tight long-term trading range right now. Fundamentally, the energy market is at a crossroads due to the improvement in economy. I believe the intermediate view of this market is continuous sideways range-bound trading. However, I would only take trades to the short side because ultimately with the war winding down and more green resources becoming available, the energy market will continue decreasing in price over the next several months. There are several foreign economic trade factors involved in the energy market, so expect slow decreases in prices over the next year. I recommend range-bound trading for the foreseeable futures and only taking positions to the downside. Taking a technical look at currencies, the Japanese yen broke the downtrend line a few months ago and is still sloping up with some degree of momentum. If the market can maintain the current level without dropping down to par, I believe the trend will continue. However, if the yen begins moving much below par value, I anticipate a test of the low once again. I would watch this market over the next few weeks to see how it reacts to fundamentals. If it shrugs off mildly negative news and stays above par, I would consider a long position. However, as of right now, the trend is not strong enough for me to commit to a long position or even a retracement to the long side. Finally, we have the Australian dollar. The market has a divergence between the RSI and the current price. The RSI does not, I repeat, does not provide divergence too often and is known to be a conservative indicator. Therefore, I would be cautious if I was in a short position right now in the Aussie. I wouldn't necessarily go long, but I would be very cautious to the downside at this time. That's it for today. I will update you Sunday night or Monday morning at the latest. Have a great weekend, everyone. We did really well this week overall, one of the best weeks we've had since the beginning of the year. Thank you very much for the nice words from all our subscribers. I do appreciate all the nice emails. Thanks and have a great weekend.